Chairman Powell's speech, he discussed a number of topics. It was largely a lot of the comments he made from his June 20 speech were evident. But his conclusion to the speech was, as long as the economy remains strong, we're going to be raising interest rates. And he said, the next line, the economy remains strong. So I think given where we've had growth in the first half of the year, the market's now expecting still a healthier pricing for December for the rate hike. September's already priced. But the long end of the bond market continues to kind of get compressed. And stocks have been rising as the long end is really down about 20 basis points. So if yields start rising again in the long end, that may just keep a lid on equity prices for a little bit.
Gene, what's your take both on the speech last week and what Fed policy we're likely to see in the next 6 months and its impact on equity markets?
Yeah, I think what's interesting is the fact that you look going forward, the Fed, as your other guest has said, the Fed will raise rates in September and most likely in December. You look forward, though, look at 2020. Back in May, the market's pricing the Fed would raise rates 25 basis points. Now the market's actually pricing the Fed will cut rates by 25 basis points. And we think this is interesting. Potential signs that the economy will slow as you have rising input costs, stronger dollar, you have potential ramifications of the trade war. So we think it's interesting how the economy could slow down in 2020.
But not until 2020, Gene. Are you optimistic about growth for the next 18 months?
Definitely. Near term. You look at, we just finished earnings season. Earnings were up 25% year over year. Revenues up 10%. Profit margins near the end of this current business cycle. Profit margins almost 11%. It's amazing this late we are in the market cycle.
Did you see Bullard and Mester?
Yes. Mm-hmm.
So Bullard wasn't just here. He went all over the place with the same message. Now, do they coordinate that? He's a non-voting member. But his message was, as strident as he could be, saying, don't mess with, we aren't going to try to beat the yield curve. And the more you raise short-term rates when you're at 280 on the 10-year, the more you flatten it. And I asked him, is it a chicken and egg? Do economic conditions cause a flat yield curve, or do flat yield curves actually, can you cause a recession? And he seemed to think that the Fed could cause it. And I just wonder whether, is he speaking for Powell? Is he speaking just for himself? Because he was so dovish. He was more dovish than, I actually said Trump's going to tweet about him, say, he's a good man. This Bullard guy is really, if Powell messes up, I know who I'm putting in there. But
so Bullard has certainly a little bit different forecasting framework from the rest of the Fed, let's call it the Fed presidents. He is one of the lowest ones on the dot plot, along with Neel Kashkari. And in his view, unless productivity or trend productivity increases, the neutral rate is going to be low.
So like we're already where we want to be. He said we're already at neutral.
With respect to the yield curve, though, what the Fed is trying to do is trying to kind of, don't focus on that right now, because they're trying to get you to focus on different measures of the yield curve that are not showing signs of imminent inversion that would typically precede a recession. Because what they're trying to do is they're trying to get to at least neutral right now. So they don't want to get to a tightening stance, but we don't know exactly where neutral is. If you're Williams, it's somewhere in the 250 range. If you're, let's say, Mester, it would be in the 3% range. So that's the target range they're trying to get into, and that's what balances the risk of, okay, maybe things can overheat or could overheat, and we may have to deal with an inflation scare later, or conversely, if things are not as good, if there's more supply side added to the economy and we don't have to go as fast, at least we keep things on an even keel. So that's where they're trying to get into right now. They'll decide when the time comes, most likely in the second half of next year, whether they want to go further than that. But for now, that's what they're trying to do. It's still, don't pay attention to the yield curve. Pay attention to us and what we're saying.